Sorry for the delay there, guys. Just getting some stuff set up. All right. Oh, there we go. All right. How's everyone doing tonight? Hey, Jen. Oh, that's all wrong. Hold on. There we go. Should. Does GS have an indicator for World War III? Yeah. No matter when World War III starts, it will start when the market's closed. So after 4 p.m. Eastern Standard Time. World Wars are not allowed to start at any other point in time. In the future, though, we could probably put some of your guys' membership fees towards getting our own Mossad agent who can give us the inside scoop. Jen, you got mod because the world is blowing up. You're conflating the two. Well, how's everyone doing? It's gonna be just me for a few minutes. I think Jay Fresh is wrangling children, and Dork said he's gonna be 10 minutes late. Did someone just mention Book of Eli in chat? Nice, Crackle. I mean, Ben, I'm going to be honest with you. There were a ton of puts sold at every strike in April. Oh, hey, it's Dork. Hey, Dork. Welcome to the apocalypse.
Yo. Why is it the apocalypse?
No, no. Do you think Iran has nuclear weapons?
Oh. Uh that is a good question.
Oh, do you not know what's happened?
Yeah, didn't Israel just shoot a bunch of missiles and kill some dudes?
Yeah, they assassinated a bunch of military leaders.
Okay.
But inside Iran.
Oh. Hmm.
Yeah.
Yeah, wasn't Iran doing military exercises?
Iran's always doing military exercises.
Hmm. Well, what are feuds do? What? Oh shit! The last 5-minute candle on Spy after hours. Yikes!
Yeah. You should go
How
look
far down are
at
feuds?
you should go look at feuds. 157 points so far.
Holy shit! Well, there goes Vega neutral.
Yep.
What about oh, the 5-year fucking gap down super hard too. Damn it.
Probably far closer to GN now.
Yeah.
Yep. Oh, also, Jfresh will be here in a minute. He's just, I don't know, probably covered in poop or something.
Probably. Yeah, I'm eating dinner right now because you scheduled this at dinner time.
I'm eating dinner right now too, but I'm eating dinner because it's 9:30 p.m. and I'm an adult. You're eating dinner at 6 p.m. like a geriatric.
Thank you, Gherk. I accept your compliment graciously. I baked a loaf today.
I saw your loaf.
It's a good loaf.
Are you eating some of it right now?
No.
Hmm.
Although I should be.
Yeah, I don't understand why you're not.
Because I have brioche buns from the store that are really good.
Yeah.
I want to try sourdough brioche, but buns just seem hard as fuck to make.
Good evening, James Rudy. Buns?
Yeah.
This is going to be a stream about baking, isn't it? They're not that hard to make.
No?
No.
I've never tried, but I was looking at some recipes and they look complicated.
You know what's a bitch to make? Crackers. Fuck crackers.
So, funny story. Well, it's actually not that funny, but story. I had something like 350 grams of starter, like just discard.
Mm-hmm.
And people in the pickle jar have been like, "Well, make crackers with it." I was like, "Okay." Basically, just melted like half a stick of butter and stirred it into the discard, and then smeared it on a piece of parchment.
Yeah.
And then you essentially pull it out halfway through, and you, or like a little, like once it sets up a bit, you use like one of those pasta rollers to roll out some squares, and you poke it with a fork and all that. So it looked good. They were done. They were nice and crispy. Like the parchment was starting to kind of curl a little bit. And I go to pull off the crackers, and lo and fucking behold, they're fucking fused to the goddamn parchment again.
Yep.
Like, how do I keep these crackers from mating with the parchment? I didn't butter the parchment, so I guess that was my mistake, but
I would assume that you probably take them off the parchment after they set, then roll them, then put them back on the parchment.
well, it's just like a giant sheet.
Yeah.
I don't know. I don't know if it would like withstand that.
Also,
might have already been stuck.
why are you making crackers with? Wait, are you using yeast?
Oh, I'm using starter discard, so it's a just starter.
Just flour and water.
Yeah, it's basically poolish. That's what the sourdough starters maintain.
Okay, listen, you've been baking for 2 weeks. You don't need to start pulling out the terminology. All right.
Look, I just learned how to slap and fold. I'm practically a pro.
I'm gonna start sending you individual toe socks that you can wear with your Birkenstocks at your new high desert bakery.
I would rock the shit out of those toe socks. Sorry, socks for toes.
Oh, I hate
Not toe
sourdough.
socks.
Gackle. I joined late. Are they going over some weird kind of kink? Yes.
That's correct.
Yeah, Dork's got a flower kink now.
Yeah. I like to raise and cultivate an entire civilization of living organisms and caress it and love it and
then,
take care of it
and then
for
burn
3
them
days
alive.
straight. Yeah, and then cook it alive and then eat it.
You know, scientists just found out that fish don't like being caught.
No way.
Yeah, it's very painful for them.
I just thought it was like a surprise piercing and they liked it. You know, Nitu, you're actually very much so not wrong.
It's also a book. Already called that.
Ah. Yeah, the first thing we did when we did agriculture is we were like, let's grind all this wheat up, mix it with water, just like we did with the acorns. And they had some goop and they turned it into bread.
Wait, who did what
And
with
then
the
they
acorns?
You could make like acorn patties. So it's kind of like a pita, but made of acorn.
Have you ever had one of
Crumbly.
those?
I have. They're not that great.
No. I wouldn't describe them as bread.
Yeah, I guess
It's more
not.
like a nut pancake.
Yeah. Yeah, I think PETA was doing a lot of lifting. But yeah. And then wheat, you know, I'm sure they had some sitting around and it started fermenting and they tried to do the same thing and then they got hammered. I don't know, the history of beer is crazy. Like the Mesopotamians had a god of beer, Ninkasi. So it's been around as long as the oldest civilizations, which is cool. And bread, obviously, you know, has been around since before like written history.
Technically cheese, too.
Cheese, yeah. Humans are weird. They're the only animal that drinks the milk of another animal.
Not only did we drink the milk of another animal, we thought it'd be a great idea to store the milk of that animal in the stomach of one of those dead animals.
Oh yeah, we were thinking of some weird fucked up shit. That's what happens when you have nothing but time and no technology to distract your brain. Gurk fucking pulling out receipts.
What? No, I was giving him the book to read. This isn't a game of one-upsmanship.
You see, what I want to do is I want to make beer bread. I just don't know how.
It's the same thing.
Beer sourdough. What's the internet tell me?
Mm.
Ooh, this one's a box bread recipe.
Have you ever
I've
tried
had
just
terrible
like...
luck with those.
Have you ever tried just taking a bite of bread and then washing it down with some beer?
Well, yeah.
Boom.
It's two sides of the same coin. So need to. You're saying I should like just take an entire bottle of like double IPA and just dump it in with a bunch of starter and flour and just fucking go for it? I might be down.
We'd love to take questions, but nobody's raising their hands. So I'm just listening to Doric talk about fucking bread. There we go. Thank God.
Okay. Do you hear me?
Mm-hmm.
Yep.
Okay, so I don't have
If you got up
Gammastrike
here to
yet.
talk about fucking bread, we're gonna have an argument.
No, I'm not old like that yet. I'm not old enough to enjoy that.
Thank God.
But okay, so I don't have Gammastrike yet, but I'm close. I'm close to pulling the trigger on it. I just want to understand when you have the live Greeks by strike up, like the
Mhm.
delta and the gamma and the charm. I'm just interested how the delta and gamma levels relate to each other. Like, let's say if gamma is positive and delta is also positive, is the selling of the uptick diminished because there's more positive delta to be like, I guess, bought by the market maker?
Mm. Interesting.
Is that a bad question?
No. I'm trying to think of how to answer it right. So the gamma is derivative of delta, which means that it is a second order of change in delta, and it's kind of telling you a little bit about how delta changes, how fast delta changes relative to moneyness. So no.
Okay, so like if delta was super positive at a certain strike, that means the MM is increasingly like buying as their hedge. Like, because if the delta is increasing, the market maker is increasing their rate of buying. But I'm thinking like in a positive gamma environment, it's buy the downtick, sell the uptick. So if there's positive delta, is the market maker buying increasing
No,
on the downtick?
as delta increases, the market maker is, as they become more and more exposed to delta, which is what you're seeing, the market maker is becoming, is needing to hedge delta less and less. So when you have a big pile of delta to the upside of spot, as spot approaches that, the market maker's hedge is reduced, which means that they're selling more on the uptick.
Okay.
Yeah. So if a contract has a ton of delta, right, its gamma is going to be really low. So as delta increases, right, the market maker's exposure to delta increases and they have to hedge accordingly. But once the contract's delta is maxed out, there's really not much else for the market maker to do on that front. So when you see a contract with a ton of delta that's like, super far in the money, the market maker's not really going to do much with it unless spot changes drastically.
Okay. Okay. All
Yeah.
right. That's making sense.
Yeah. So the gamma is max when you are at the money for that contract. When you're far away from it, either way, in the money or out of the money, gamma goes down.
Okay.
Yep.
So another way to think about it is if you look at the gamma curve for something, gamma max. Sorry, I'm chewing.
You
Is
eating bread
about
too?
where like most of the OI is, or where the maximum amount of OI is near the money. So that's another reason why gamma max is kind of a top, because there's not like that's where most things are, and there's less above it.
Yeah.
Okay.
Yeah. So
And
I mean, you just need to remember.
Yep.
okay. And so one last thing is there was I think 2 weeks ago there was a Friday. It was on a Friday, and we had dipped down and we'd reached some significant sold put support, and we were climbing up, and Gherkin said the negative delta could be used as fuel to the upside. Does that mean that above a certain point, the MEB would start buying back their delta as they're shedding the negative delta, and so it would raise the price?
I think what he's referring to is the charm on those contracts. Because as you pull away from those positions, like if there's a sold put position and you're pulling away from it, what's happening to those puts is their delta is approaching 0.
Mhm.
So what's happening is the market maker's exposure on those puts is going down, right? From gamma and, eventually from charm too, or over, not eventually, but over enough time, effects from charm will be seen too. So I think that's probably what he was referring to.
Okay.
Well, that was fun. I got my Bluetooth headphones connected to my computer randomly. Anyway, um, yeah, if you go back to last week's roundtable, what I was trying to say, I think I got cut off. If you go back to last week's roundtable, I kind of discussed the dynamics of delta and gamma. Somebody kind of wanted to like explain like I'm 5. It was pretty early in the stream. Maybe go back and watch that. I think it was roundtable 21. Just
Okay.
like within the first like 30 minutes, and I go pretty in depth into how the dealer's hedge is affected by the very large amounts of gamma and 0DT contracts, but also the delta around spot.
Okay. Are you okay with 2 more questions, or am I
Yeah,
confusing?
no, go ahead.
Okay, so
No one else has
how
their hand up.
far? Okay, so yeah, I just don't want to take away from other people, but so how far like away from a strike is the market maker deeming it like okay to reduce that hedge? Like in like when we talk about charm and the positive uplift of charm, like how far above certain strikes is the market maker deeming it okay to start shedding the delta?
Well,
And
if
like
you
also if we're sorry,
no, go ahead.
like and also if we're heading into bought puts, sold put support, like is it going to be at, let's say, 59.25 where the sold puts are? Like when is the buying going to be, like the buy hedging going to be max, like right at the strike, and like when would it fall off, like below 59.25 it's over?
It's actually like, yeah, so like, well, below, like, when you have like a big pile of sold puts, right? And I'm like, yeah, or I point out, like, so where sold put support is during the intraday session. Um, as you approach that point on the downside move and volatility is going up, and the market maker's hedge is becoming more concave, or like exposure is becoming more concave. And basically what happens there is that, the more IV goes up, the more incentivized put sellers become. And, sometimes that's before that strike. Frequently, it's like a little bit, you'll notice it's like a little bit before that strike. If you actually test that strike, the market maker's hedge for that kind of flattens a little bit because there's so much gamma there. And they don't need to hedge much. And so they'll actually buy the dip a little less hard than if it starts reversing before that strike. And so
Okay.
generally, like you'll see like price turn around at like a level that'll be like 32.50 or like 33.10 when you're looking for a test at 30. You know, and that's usually where like the market maker's buying is at its strongest.
Okay, interesting. And so, and then like if like charm, how far above a strike is the shedding of delta taking place? And I assume that would change on volatile days where it's more likely to reverse or something like that.
Again, like the shedding of delta is going to be strongest as you approach that strike. But if that strike goes in the money, the shedding of not as much delta will be shed. And so it's really like there's kind of a range there on either side, especially major strikes like that. Hold on, let me share my screen. I guess let me move this over, and then I can share this screen with everybody. Um, yeah. Okay. I'm a retard. I top tick 60-30. I heard Gherk refer to Vana as a bottom a few weeks back. Yeah, it can be. What was it? So yeah, you'll generally have like a little range on either side of a major strike like that. Whether you're approaching it from the downside or dropping into it from the upside doesn't really matter. But like as you approach that, IV will kind of be spiking. Either on calls on the move up or puts on the move down, and that's going to encourage a lot of people to sell this strike and the strike below on the downside move. And then that starts to kind of counteract the market maker's hedging as that strike is approached. And then as that turns around, the market maker buying starts to pick back up because the hedge they just shed needs to be rebought. And that's where you get the mean reversion from.
Okay.
But if it tests that strike, if it breaks kind of through that boundary and the actual strike gets tested, you're far more likely to get like a continuation.
From both the down and upside.
Mm-hmm.
Okay. Interesting.
Yeah, I would just like to add too here that it is really helpful and important to understand how a market maker will hedge based on price, because it's literally it's predictable flows, which is always valuable. But you have to think too, kind of like one level further in the game, because a lot of other people are trying to do that as well, and they're changing their positions dynamically based on similar information, right? So you also have to think about not only what is the market maker going to do in these various situations, but also how are all the other participants who are also trying to game the market maker, what are they going to do in response to what the market maker is going to do as well? And Gherk is, sometimes we'll talk a little bit about that. Like, are all these calls going to sell off, right? Or are these puts going to get squeezed out? Like those kinds of things. That's not market maker movement. That's people in the market. And that can have really large effects, right? So remember that delta is it's the big boy, right? That's the thing that everybody's trying to hedge, and that's the thing that has the largest amount of notional value for buying and selling. The gamma and the vega and all that other stuff, I mean, that kind of helps you assess how delta is going to evolve over time, but delta is the name of the game. And if people in the market are changing their delta position, that's going to change the market maker's delta position, right? And that can have a bigger impact than, say, like gamma.
Yeah.
A great example of that is the GameStop squeeze. Everybody said, gamma squeeze or whatever. It was a delta squeeze, right? It was just people piled into so many contracts.
Vega
It
too.
added Vega, yeah. But people, yeah, so it's a little both. But people piled into so many contracts that it just added a ton of delta, right? So if you're just looking at like gamma and things, I mean, that was actually a big argument for like how like it wasn't a squeeze caused by options, because people looked at the gamma hedging and said, oh, there wasn't enough gamma to initiate this. It's like, yeah, but all of those contracts like piled in and added a shitload of delta. Like, even though everyone was buying like little orders far out of the money, there was so much delta added
Well,
up.
yeah,
in
yeah.
aggregate.
Well, it was the delta that those contracts added because the volatility was so fucking high, and it ultimately led to a short squeeze of sorts because there weren't enough shares to,
It was a. I
provide
mean,
the
yeah.
liquidity to hedge these things.
You also got a squeeze on GameStop was a lot of different dynamics, but it also squeezed like Vega because everybody piled in at what they thought was the top, right? The same way they do on the SPX when you test a major level. Everyone came in and sold calls, and they sold far dated calls at the top of the newly opened chain. So when the chain got blown out the first time, everyone went out to the farthest strike and like sold leaps. And then it kept going up, and the Vega on those contracts was massive, and they just got blown the fuck out. And that happened like
Mm.
3 times on the way up. And so yeah, I mean, like, but it started like J Fresh said with just a little delta squeeze, and then that kind of started to trigger the effects of the other Greeks and derivatives of those Greeks.
Hmm.
Yeah,
Okay.
so like so to give you an example of like, you're trying to game out where's the MM doing the most trading based on, gamma and other things. Let's take a situation where, well, I guess now this isn't valid, but I'll use trading hour values. Let's say we're trading at 60.25
Okay.
and there's a bunch of sold puts at 6,000. If something happens, like say Israel starts to, engage in military tactics in Iran,
Diplomatic
a,
airstrikes,
just,
okay?
just a hypothetical.
Preemptive.
Nothing ever happens. And the market starts selling off into those puts, right? If those puts stay there, the market maker is just sitting there, just as you're getting closer to 6,000, just buying a shitload of delta, just buying hand over fist, buying futures to hedge that, which is causing upward pressure on the market. And eventually, once the put sell, whatever happens starts to get a little exhausted, right? Or if say longer term puts start taking profit, right? You can get this very sharp reversal back upwards. And it's usually what we see, right?
Yeah,
When you
especially
go
on
down into
positive.
sold puts.
Yeah.
Because if the bot puts, so there's bot puts taking profit at some point after the move is exhausted.
It's not just that. It's the
It's always a
entire
blend, right?
time. The entire time it's falling, there is a long side position accumulating. This is specifically in positive gamma environments, but literally every tick it drops, someone's buying in. So they're buying and buying and buying and buying, and when the momentum of that drop is lost, yeah, you're gonna get puts taking profit, which accelerates that reversal. But there's already somebody just buying the whole fucking time.
Yeah. Yeah.
Now they're buying like
Um,
the further it drops, and this is why we look at gamma neutral. The further it drops and the less exposure they have, then you can end up in a situation where they're not buying anymore because you've dropped enough that they have no positive gamma exposure at that point. At which point you can get like that they can dump their hedge. Sometimes, like the first time you test gamma neutral to the downside on like indexes, very frequently you'll see it sell off really fucking hard. And that's because the market maker just takes the loss on all the shit they just bought to hedge the downside move when they were positively exposed, right? So they dump all that fucking delta, and then puts take profit, and the market maker starts buying back delta, and then they're buying the uptick in the negative gamma environment, and you'll snap back and retest GN from like the downside, which I can show you that happening probably a few times here. Um,
Mhm.
like
yeah.
back
So
here when we lost it, like this was bad. You didn't snap back, but if you look like here out in December when the sell-offs were a little bit more normalized, you sell off for a day, there's a day of consolidation, and then you snap right back, and then you sell off for a couple days, consolidate, snap back, sell off, snap back, right? And that's because volatility increases in both directions below gamma neutral. Um, but it is something that happens when when the market maker's hedge flattens out there.
Yeah.
Okay.
So let's come back to that. Where because of all that positive gamma and that around 6,000 market makers buying, eventually it pops back upwards. But let's say that people keep selling off, then yes, the market maker's buying, but if we sell off enough that all those sold puts start to close,
Yeah, and then the market maker dumps the
now
hedge
you're
by selling.
now you're dropping delta. So the market maker doesn't have to have as much of that stuff that it was just buying. And so by dropping that delta, it can overcome the gamma. And because delta is usually so much more impactful than gamma, that can happen. So both things, a sharp reversal and a sharp continuation could occur.
Yeah.
The difference being, what are the participants around the market maker doing in response to what the market maker is doing, right? So you kind of have to keep both of those things together in your mind, and it can be difficult. Obviously, you can, it's the Keynesian beauty contest, right? Everybody keeps trying to go one step further than the last person to try to figure out when to sell. It's like, well, everybody else is going to sell at 100, so I'm going to sell at 99. But then everybody else is also thinking that. It's like, oh, well, everybody else is going to sell at 100, so I'm going to sell at 99. But the really smart ones are thinking, well, everybody else thinks that everybody's going to sell at 100, but actually going to sell at 99, so I'm going to sell at 98. And you can keep doing this forever and ever, right? So there's many layers to how market participants are going to react, but you
So
kind of
like
usually,
the game of chess you're talking about on the one round table, like how you have to see it a couple moves ahead type of thing.
yeah,
Yeah.
yeah.
I mean, like, a really good example is, like, especially for Delta, if you saw Pickles picks last night here, this isn't to, like, toot my own horn, it's to really explain what I'm seeing. I said, like, if we get kind of a neutral print for PPI, that we're probably going to end up either trading kind of on this side or this side. And this is the image from last night's Pickles picks. And this is a delta chart into the end of this week. And the reason being is because traversing this range is kind of really easy, because the market maker's hedge is fairly stable across that. But then on either side of that, the market maker's exposure to delta falls off really hard. And then you have these big piles of delta kind of bounding that range on either side. And so kind of what happens is the market maker, hedges up on the upside move, and then they kind of stop hedging, and then price falls back, and then they kind of stop hedging again. And then it just keeps swinging back and forth across what me and Dork love to refer to as the saddle. And so ending up in either of these two price ranges today meant that, like, price action was going to be really just very choppy in this kind of like $15 range between these three strikes, where delta is very low and price can once again traverse easily, right? But it's very hard for for price spot to go above this or below that down at 6,000. And that's what happened today. I mean, this is literally the price action we got because of how positioning is structured.
Right.
And so knowing that,
that-
knowing that the day before, once we got locked into that upper range, you could have like sold the condor, right? You could short the top test, buy the dip. However you want to manage positions within that range, but you have a high degree of confidence that price is going to just stay there because it has nowhere else that it can really go, without like some kind of event or something driving up volatility.
Okay, so like let's say at the massive strike, is that the 60-50 with
Yeah, it
the
is.
positive delta there?
On the
So
on the
like
upside, yeah, this one's the 50. Sorry, there you go.
that's positive delta. So the market maker above that strike, like they have to buy a lot. So if they're going into that strike up into 50, is the rate of selling the uptick increasing?
Yeah, so as you approach 50 and this delta starts to get hedged, there's a little bit of buying, But like right before you get to 50, the market maker doesn't really need to buy anymore. And so that makes it kind of resistance because the market maker is just going to start shedding that hedge on the downtick because they have less exposure here and a lot of exposure here.
Okay, but say let's say you get over 50, then returning back into it would be like it would be supportive at a point
Yes.
if you've managed to get to 55
Yeah.
or
Yeah. Once the market makers like packed that hedge on, this level would become a lot more supportive. So say
Okay.
spot moves to here, now testing this down to the downside is going to be supportive. Now it can slip, like you could get back down under like 48 and the market maker will start dumping that delta again. But on a retest of this, yeah, it's gonna be supportive because they're now carrying that additional hedge. But something else to consider here is, and this is kind of why our downside moves are really liquid right now. Like if you notice trading today, like when we move down really fast, and then we move up a little and then chop like infinitely.
That range today was so frustrating when Trump was talking, just bouncing off the VWAP, the first deviation, and then the main one, and just boom, boom all day.
You mean the delta flip?
Yeah, and then I also have it the VWAPs up too.
Okay.
And it was just bouncing.
So the reason for that is because the MM this is a lot different than like 2024. In 2024, all of the delta to the upside of spot was always negative. Which means when the MM pushes into that negative delta, it kickstarts their cover bid, and they have to start buying delta as price goes up, like really fast. And so you get a squeeze, basically. And like basically all of 2023 and 2024, all of the upside price action was driven by those squeezes on short calls. But in this scenario, this year, all of this delta is positive, which makes the upside really fucking grindy because the MM just doesn't like they're already super exposed to delta and positively so, and like throwing another in the money strike into that basket of delta just really doesn't affect their hedge very much. But if price moves down, they have to sell that delta.
Okay, I was wondering if you could just go back because that's really what I was wondering is how negative delta works in positive gamma environments. Like if you could elaborate on that, because that would really, I think, help my understanding.
So negative delta and positive gamma environments is generally, like large sold call positioning to the upside of spot.
Yeah.
Here we don't really have a lot of that. I mean, there's some, but not a ton of it. And so, as price is moving up, excuse me, into negative delta when it's there, which it's not here. But if the delta were negative, the MM would have to start buying that uptick more and more as they became those negative delta strikes go in the money.
Okay.
But the opposite is true for positive delta. So when you fall, like when price falls into positive delta, everything's very liquid to the downside because the cover bid goes the other way.
Okay, because the positive delta has already kind of been like, it's already in the equation in a way. Like it's already been hedged.
Yeah.
So there's no need to hedge more as we fall back into
support. There's a need to hedge more, and there's a gamma hedge there, but the gamma hedge is not dominated by the delta hedge, right? It's just derivative of it, and so, if we're talking about delta, that's the big boy, and so yeah, I mean the effect of gamma is reduced because the delta is all positive on the downside move.
Okay. Does anyone else have their hand up? I can't see because I have one last question, but honest, I don't want to take time away from anybody else.
I don't see. Wait, hold on. Yeah, there's one hand up. It's need to though. It'll be fine.
Yeah, it's fine. You can wait. He likes waiting. He's into that kind of shit.
I see him in the XPX chat all the time. He's a regular. Okay. So if we could go back to the live Greeks by chart, or sorry, Greeks by strike, sorry. Is it
Or
possible to
like
yeah,
this is blanked out. Hold on.
okay.
Here.
So like let's say gamma out of strike is negative or like less positive, but delta is positive. Could you make an inference and that would be sorry, let me look at what I wrote now. Okay, so let's say gamma out of strike is negative, but delta is positive.
Yeah, okay.
Does that mean that a lot of the contracts are like could you make an inference that they're bot calls? Because the market maker short gamma but long delta. Like could that be an inference you can make?
Hmm. Mm, no, because we use the naive assumption.
But the naive assumption assumes all calls are sold, so delta should always be negative, right?
Yeah. Hmm.
So if it's assuming all calls are sold and all puts are bought, then Dex is always negative. So if it's positive, then that would mean and gamma is negative. That would mean delta is positive, and then gamma is negative. So market makers are short. The is short the calls, but the participant is long the calls, right?
Yes.
You don't have the product, do you? I think you mentioned that you don't have Gammastrike.
No.
No.
Okay, yeah. So if you did, you could look at our Greeks end of day, and you will see that assertion that delta is always negative. You will see it to be true. So it's just kind of neat that you came to that organically. But we operate under the naive assumption because it gives you like a sense of range, right? So it could be anywhere from that to the fully positive version of that, right? That's kind of like your range of possibilities.
I think he's talking about Dex, like the delta exposure is positive.
Oh, like on Greeks by Strike.
Yeah.
Yeah, we just
Okay.
for delta only, we have calls positive and puts negative, just because if we did them both negative, everybody would get really confused. The thing
Yeah.
about
Okay,
Mhm.
that makes more sense then. So positive delta, displayed positive delta is just calls.
yeah,
Yeah.
Okay. Because I was thinking that. All right.
yeah, we only flip it for delta, just because it would be really confusing. So then, if you go and look at the gamma for all that positive, quote unquote, positive delta, the gamma is also positive because that call delta is actually negative. So we're just saying like this is call geek delta. People generally will think positive. We went back and forth on this for a long time, and this is the one that made the most
Okay,
sense.
that makes so much more sense. Because I thought that if like a sold call came through, that the delta would be like. I thought it'd be reversed. Sorry, my dog is broken. But okay, that makes more sense now that I understand how it's
It would be,
actually
yeah.
distributed.
If you're thinking about it, yeah, from the perspective of the market maker, yeah.
Okay, I feel like I have definitely understand the product a lot more now and how it's like the data is distributed.
Good.
Cool.
Thank you guys so much, man. Like
No
I love
problem,
this
man.
shit. I've been watching all the roundtables on 2x speed, and it's just been great. So I'll
Hell
definitely
yeah, buddy.
Yeah.
watch
Thanks
21
for showing up and giving a shit.
Yeah.
for
Thanks
Hell
for
yeah.
sure.
the good questions. Appreciate it.
Yeah.
I hope they were good. I feel like they're kind of retarded.
They were good, dude.
but-
They were
Oh,
good.
that's
No,
good.
they're good.
Yeah.
All
Thank
right,
That's
you.
good.
stay goated, man. I love you guys, bro.
Appreciate it, man. Have a good night.
All right, you too.
Later.
Hey nerds.
What's up, dude?
So,
How you doing?
Hey. I actually don't have a question, just want to share a little something that I did this week just as an experiment. Went into the tickers of the real RCD live on Monday morning and just did a quick less than 5 minute skim on, is anything up near Gamma Max, and Amazon and Meta were. And I shared Dork the results as of today, but I sold some out of the money. I think there was like 0.3 delta bear call spreads on both, just one each on both those, just testing the waters.
Yeah.
They're both, yeah, both of those are up
Well,
over
yeah.
90% before this fun stuff with Iran. So,
Oh, nice.
so yeah, no, I just thought that was like a little like, hey, obviously not 100% probability, but that's you're always
Well,
saying like, hey,
that's one of the
don't love
reasons I
gambling.
like trading like the big mega caps, which I know everyone hates that I do that, and I always pick them, and they're like, "Oh, the options are expensive. Pick cheap stocks." But like, these are more stable, more liquid chains, and so they're going to respect those boundaries a lot better,
Yeah,
which is
and
nice.
it's nice, and and the process was like, oh, this seems like stupid easy. Is it really this easy? And so far, yeah, I mean, so
Well, so one thing that you may have accidentally caught, you may have I think that's something that should be taken into consideration contextually is that SPX and SPXW Vega neutral are right near spot. So when it comes to things like the dispersion trade and all that, I mean,
You do, yeah. I mean, you gain kind of a mechanical benefit from the
yeah,
break, the
your odds were
breakdown and
tilted pretty good.
dispersion.
Yeah.
so
Yeah.
let me see if I can distill what you just said, Dork. If SPX is near the Vega neutrals, then it's highly likely that some of the Mag 7 will be near Gamma Max.
I mean, almost definitely.
I think a better way of thinking about
But
that is the likelihood of Gamma Max moving up on them is lower. I think that's a better way of thinking about it.
it's
Than,
it's multifaceted.
Like six of one, half
So
dozen of another.
if you're thinking about it in terms of dispersion, and SPX is near VN, the dispersion trade, like all the available arbitrage in the dispersion trade is kind of blown out. And so the effect of that is going to be that the short vol on the index side of the trade is going to start to collapse because levering it up no longer presents a significant amount of alpha. And at that same time, then volatility on like the largest components of that dispersion trade, like Meta, Amazon, Apple, Nvidia, is going to go, like the volatility there is going to go down because there's also no arb left on that side of the trade either. So the conditions have reached the point at which it is more, there is more alpha to reversing the dispersion trade and going short the equity vol, long the index vol than there is the other way.
Gotcha. That makes sense. That was it.
Oh, okay.
well, there you go. Now you know. I mean, so yeah, so it was a good trade. Congrats to you for that. But yeah, there was a little bit of extra stuff going on that gave you a little boost in the background, which is good.
Yeah.
No, it's good to
Higher
have
confidence.
Yeah.
just another play in the deck.
Oh yeah.
All right, I won't Irish goodbye you guys this time because it hurt Gherk's feelings. So
It really did. Yeah.
I can tell.
GTFO.
Yeah, he's been talking about that ever since. Actually, he's been plotting on finding a way to TP your house in
Wow.
response.
Yeah.
I talked him down from the TP
Yeah,
ledge.
that's playing with fire.
He was shopping for like Charmin Ultra Soft and all the high ply TPs, so then he could like sprinkle it with a hose, and then like get it real stuck on there. And I was like, look, dude, you're getting real into this, and I'm gonna need you to calm down.
I was actually just gonna shred up a bunch of toilet paper rolls with an industrial shredder, wet them, and then just chuck the balls of wet toilet paper at your house.
Oh, see, I was just gonna in response get that insulating foam spray and spray that in your apartment front door. Just seal you in or out.
Oh my god,
I was
it's a
just gonna
fire
see if we
door.
could
I would die.
grab you and
You have a fire
give
escape,
you a
don't you?
swirly.
No, I will live on like the 13th floor. I mean, my building's old, but it's not that fucking old. My old apartment had a fire escape.
This brings up, okay, for all the other parents, and Jay Frisch might appreciate this amongst this group, but the other two of you won't. One of the rules I taught my kids early on was don't start what you can't finish.
Mm.
It's reasons just like this, and we'll see what's going on in the Middle East, but that's a whole different story.
Yeah, don't you have to go stop our Iranian cyber attacks now?
Yeah, he's a cyber mercenary for Iran now, I think.
Eric, I just read your tweet. You are despicable. I love it.
Oh god, now I have to read his tweet.
Oh, his technical analysis on
On Iran.
Political conflict. Yeah, that was pretty sick.
You bastard. Oh my
Yeah,
god.
he's doing tonight TA on the VIX. Jay Fresh.
Hey, you know what? It was secondhand TA. It's minor TA.
China friend?
How
China
does...
not friend?
Oh shit. Gorilla Mode's got a question.
Here, I'll drop.
All right, later,
He's
man.
just gonna say. He's just gonna
It's
say.
Mrs.
Cock.
Michu's birthday. So
He
we'll
didn't.
get
He
Dairy Queen.
he didn't say just cock. He actually has a full question. He said, "How does a newbie figure out the dispersion trade exists?" Also, remember you called out the carry trade like 8 months before it went mainstream, and everyone and the moms talk about it. Thanks, Gherkin. Well, I knew about the carry trade before it went main.
Eric,
What?
the answer is cock.
God damn it.
That's the answer. Next
So-
question.
So I knew about the carry trade in advance because I'm a weird autist and I spent all night trying to figure out how the fuck the banks were still lending when rates were at 5.5%. And I was like, oh my god, they wouldn't do that again, would they? Because the carry trade was a big proponent of the meltdown that caused the global financial crisis, and there's a really good argument to be made that the carry trade was actually the catalyst for the global financial crisis. It was the margin call on Bear Stearns due to their leverage in the carry trade that caused the collapse of U.S. markets and Solomon Brothers to a degree as well. And that you'd think with all of the regulations and stuff that we put in place since then that that wouldn't happen again. But I started to dig into it and realized it very much was happening, and still is actually right now at an extremely highly leveraged rate. And so that risk is still extremely present in the system, despite Jamie Dimon telling everybody that they got out of it. For the second part, for dispersion, you want to look at correlation. CBOE makes that really easy. They have an index that they publish for 1 and 3 month correlation, and basically what that is they take a select basket of like 50 of the biggest stocks in the S&P, and they determine its correlation to the index, and that tells you how leveraged the dispersion trade is. If correlation increases, then there is less short vol on the index and more long vol. Less short vol on the index, more long vol on the underlying. if correlation is going down, then volatility in the underlying is rising and volatility on the index is dropping. And those both of those indicators measure kind of two different time frames for you, and they give pretty good insight into when the dispersion trade is being levered up, and when it's being kind of unwound.
Speaking of which, how's the carry doing right now?
Might be a little fucked. I don't know. We could take a look.
Looks like the currency spreads are doing a little peener, but not that big. Might be the reversal we've been waiting for, though.
There we go. Ouch.
Hey-oh.
That's gonna be interesting. Vol moving up.
Liquidity go kerplunk?
Yep. Leverage.
Same thing.
Hmm.
Yes. Indeed. God damn, yeah, there is no chill on ES right now.
Is it still going down?
Yeah, and oil's also doing a little plinky poo up. It's up 10%.
Yeah. Yeah, it's a wild night.
Yeah. Well, have there been any additional developments in this, or did Israel just fucking Anwar al-Awlaki a few Iranian generals, and then they're just sitting there now?
I mean, it's an active war.
Yeah, nothing ever happened. They're just gonna be like, oh, we're gonna do bad things maybe, and then everyone's gonna simmer down and it'll be fine, right?
No, come on. Iran is at least going to launch 300 missiles into Israel's missiles and do a big fireworks show like last time.
True.
Yeah.
I thought that they had... Didn't they have like a tentative ceasefire after they did that back and forth like last year?
Yeah, but then Iran decided they wanted to continue to pursue nukes, and Iran has been very vocal about the first thing they're going to do when they get nukes is launch them straight at Israel. So,
I mean, but Israel has nukes. There are nukes, but they have them.
Does Israel have nukes?
Don't they?
I don't think so.
I don't think like officially. I think they're not supposed to, but they fucking definitely do.
Yeah, we'll see if Mossad sets off a dirty bomb in Tehran. I guess that would be the next step.
Sucks to attack Iranian people because they hate their fucking government for the most part. It's really just like people oppressed under a regime. It seems shitty to go after the civilians.
Yeah. Well.
But religion.
Well. Yeah. Well.
They killed the chief of staff of Iran's armed forces.
Yeah, but there's probably like
senior commanders of the Revolutionary Guard and leading scientists involved in the country's nuclear program.
Wait, so they basically killed like the equivalent of Pete Hegseth of Iran?
Yeah.
Okay.
I'm
yeah,
sure.
Pretty big deal.
I'm sure whoever Iran had in that position was more qualified than Pete Hegseth.
Yeah.
And less drunk. Actually, I could guarantee less drunk. They're not allowed to drink.
Well, no, the poors aren't allowed to drink.
No, the rich people aren't allowed to drink either. They have to go to Dubai to do that. Oh no, they're not allowed to drink in Dubai either. They have to come to America.
You say that, but you and I both know they're drinking. And they're smoking pot and doing heroin and shit.
I don't know. Religious fundamentalist hardliners just tend to stick. I did see it. I answered his question. Kenneth Griffin. Definitely Kenneth Griffin.
Speaker Mike Johnson, Republican leader of the House, said in a social media post that, quote, Israel is right and has a right to defend itself.
So but they're the aggressor. Right. Why? Okay.
No, I need to look at the combat footage subreddit. That's where you see all the breaking news for war stuff.
Do you guys know
preemptive defense
that I had a buy oil at 70 order. Still,
Hold on.
it's doing fantastic
I-
tonight, by the way.
I know it's probably annoying that I'm reading all these, but I have to read this one. The spokesman of Iran's armed forces, General Shakarchi, I don't know, sorry, said on state television that Israel and the United States will, quote, receive a forceful slap. I don't know why I found that so funny, but
Forceful slap.
gonna give you a good slapping, boys.
I'll slap you. I'll slap you silly.
Yeah, I was thinking that too.
I wonder.
Slap,
I wonder.
slap.
I wonder if we
Slappity
pull
slap,
back.
slap.
If we pursue, well, if we back Israel in a war against Iran, which is inevitable, right? Because Republicans need the Christian conservative vote.
I mean, they're already coming out and backing Israel on
Yeah.
Twitter.
Yeah, of course. Does that mean that Qatar and like UAE and all of the countries that just promised Trump like $3 trillion are going to take their money back? You don't have to answer. The answer is yes. But I just think it's just funny. Art of the deal.
The answer is they were never gonna give us that money anyway.
You know what the other answer is? It wouldn't have mattered because we printed all that money and gave it to them. So we're just like washing like a giant Ponzi.
Wasn't
Yeah.
that like
The money goes
Wasn't
in the
it like
circle.
That's why we never took
10x
their
their
fucking money
GDP or some
before.
shit?
What?
They were wasn't what they promised like 10x their GDP or some shit
Yeah,
like that?
yeah.
It's just like not happening.
Just all their oil sales for 10 years.
Well, they knew it'd be easy to get Trump all fluffed up by saying a huge number. And so they were like, let's just pick something that's so far detached from reality and so much better than could be true that he will just go on social media and take us and fluff us in front of everybody.
Why are we going to die for their war? I mean, I'm not. You might, but I'm fine. I'm not going to die.
Why do they always send the poor?
Well, because they're... Do you want the real answer to that? I feel like saying the
No,
real
I'm
answer to
quoting a
that's just...
song.
Oh.
System of a Down.
Yeah, no, great. Then
Everybody knows why we send the poor.
yeah.
They're disposable.
Yeah. See, I didn't say it.
On.
That is an unfortunate state.
You know how all those poor people feel about the seasonal strawberry pickers that come from Central America to pick our strawberries? That's how rich people feel about you.
Yeah. That's extremely accurate.
I like those people. How else would I get strawberries? Wait, I like the poors.
Well, you're very you're patronizing to the poors, okay? But if one of them invited you to their house,
Patronizing,
you might go,
Dork.
"Ooh."
You can say whatever you want, Girk, but we know your net worth. We know which side you chose.
So Gherk, wait, hold on.
Wait,
Gherk,
which
Gherk,
side did
hold
I
on. have a
choose?
no. Wait, Gherk.
I don't know.
This is
Just
this is
give me-
important. Okay. So what do you call the person who is supporting your establishment? Like, say, a diner at a restaurant. What are they? They're your
Customers.
patron. They're your patron, right? Are they your patron or are they your patron?
This coming from the guy who calls them GIFs.
That's correct. Yeah. So we could see who's on the right side of history once and for all.
You piece of shit.
Hey guys, Spock Gamma said we're not going below 5905.
I'm gonna fly to
You think
Dork's
we're gonna
house
do
and
it?
choke him to death with his mother.
With
We're
my
only
mother.
$20 away from the thing that we're definitely not going below.
Which
Oh,
is the
yeah?
thing we're
Oh,
not
yeah.
going below?
5905. That's what
Oh.
Spock Gamma said.
Oh, did they?
Major
Be-
support. Very little way
Oh,
of
because they know where
below.
the JPM collar is? Good job
Yeah.
for them. So we're gonna blow right through that shit. Because it's near expiry. And it has like almost no effect.
That's correct.
Yeah, okay. That's what I thought, yeah. And on increasing implied volatility.
I like
Just-
how Jay Fresh leans into the mic like it's a Senate hearing. Like, ask him a question.
First off, thank you for
That is
the
correct.
thank you for the question.
My favorite thing is that you guys can tell when I'm doing that, and you laugh every time. It just encourages me
To do
to
it more.
continue doing that.
Yeah, it's a feedback loop.
We gotta get the little mic like handling sound, so you're gonna be like,
That's correct. Yes.
Because I am absolutely leaning into the mic constantly. A little pause and then like that.
Just so I will reach out to you when we have an answer on that. Yes, thank you.
Does anybody have a question? We're just kind of going off the rails.
yeah, we're falling off task, as my old teachers would say.
I reclaim my time.
It's a simple question.
I
yes or
reclaim
no.
my time.
Yes or no? Simple question. All right, answer the question. Yes or no?
Yes, and
Why is nobody asking us questions? None of you fuckers know how this shit works. Ask us some questions so you can make money trading, and I don't have to listen to you bitch all day. Now. Gammastrike will not be bringing peace to the Middle East, but we will allow access to Gammastrike to anybody that wants to pay for it.
Somebody asked that.
it's I like how we're just is that going to be our marketing strategy going forward? Just bullying people into using and messing with our service.
I thought that was always our strategy.
There's so many people
I'm
that
on
sit
board.
around just waiting for someone else to ask the question that they want the answer to, and it drives me insane. Ask the question.
Dude,
You are the person in
this is-
charge of your own
This has
education.
literally been the last decade of my life.
I know. I feel for you.
And yes, I do. I actually don't bully them. I mock them.
Yeah, well, I'm doing both right now.
Like weak will.
And patronizing them.
Like you have a question, you're literally paying me to answer your questions, and you won't ask them because you're afraid of what I might answer.
Well, it's like
I'll
what do they-
ask
the thing is,
next
what do they
week.
expect us to do, right?
Even
Like,
though you've already observed 100 people ask a question at least as stupid as the one in your head right now, and you still cannot overcome this hurdle for reasons that are unbeknownst to me.
well, it's because they're afraid that you're going to respond to them like that one movie where he's like, "That is the most idiotic thing that anybody has ever said in the existence of humanity."
But after we
And
do
were all
that,
dumber for having
we're
heard it.
gonna answer the question.
Yeah.
Because that's what we do. That's what we've always done. We have a disease. Like, you know how many stupid questions I've answered?
Yeah. It's
That's a lot.
This is mental illness. Use it.
Yeah, take advantage
There's
of
a
our
lot of-
issues.
Gammastrike is really just the amalgamation of a variety of mental illnesses converging.
Yeah, it's like the schizophrenic writings you see on the wall in downtown or in a prison journal.
Our commodity futures on Gammastrike, and why not? Oh, because CME wants 3,000% of our yearly cash flows.
Yeah. Yeah.
See, there
That-
was a
that
there was a
pretty
good
much sums
question.
I've never heard it
I
worded
guess
like
we
that.
could charge people more.
If you make money,
Well,
why aren't you a pigeon wheel, Cobra? Exactly.
Did we ban Cobra yet?
No.
Why
But
are
I know
we-
his
why are
email
we banning
address.
Cobra?
I specifically saved his email address when he signed up, so that one day in the future, when I want to fuck with him, I can.
I see.
I'm gonna wait till like
Well,
the
he
most
obviously-
volatile, best trading day of the year, and then just
Ban him.
Oh, we got two real questions now. SD Slot Machine's question is, why is it that GN and DN was rising with spot? I'm still kind of confused on that. When? Like in general?
Like intraday?
oh no, they're talking about because you guys don't read fucking Pickles picks anymore because you think you're so great now. But he's
'Cause we are
talking
so
about
great.
me discussing the rapid rise in gamma neutral and delta neutral on both the monthly and weekly chain over the last few days. It was like really rocketing up. And like highly indicative of out of the money put closing. And then switch, like it started on the SPX chain and then swapped over to the SPXW yesterday. But yeah, I mean that's why vol's been going up, is because they're closing a lot of those out of the money puts.
Yeah, it always goes in the opposite direction than you might think. Because, okay, so think about it like,
Well, the
Like an ice cream cone?
overall hedge is reducing, and so the 0 point of that hedge is moving closer to spot. Because total positive exposure is declining, which pulls the 0 point up.
yeah.
Right? Yeah.
So there's all this, so there's all this like.
I know
so,
it's an
you know,
oversimplification.
Yeah, so to calculate these, I don't really have a great like metaphor, but to calculate these things, you basically have, the puts are negative, calls are positive, at least for delta. Well, I guess for both. And kind of like the middle is sort of like somewhere in between those two. So if puts get bigger, the middle gets pushed. You have to go farther into the calls to balance them out. So so as puts increase, as let's see, as puts
But like
increase,
you could think of it like a rope. When you push down on one side of the rope, you notice how and you have like another rope underneath it. If you push down on the rope, you'll notice that where it crosses the other rope goes up, right? Those same forces are in play.
Who has ever done that? I don't know what I'm.
You
know what I'm
can't
imagining
visualize
here.
a rope, and when you push it with your finger.
Imagine you drank too much.
Yeah, there we
and
go.
you come home and your wife is sitting in the sex chair. You drop your pants and approach her soft and attempt to then make your entry in the same flaccid state. That's what it's like to push a rope.
Yeah, there you go.
Yeah, but he's pushing. No, he's pushing. I don't even know.
Fucking Theta Decaying Corpse. You're raunchy. Yeah, it is hard to explain, but yeah, like puts generally will start to push the neutrals up, and calls generally will push the neutrals down. It all depends on moneyness, but
yeah,
we assume that the majority of market participants are selling out of the money calls to buy out of the money puts.
I think that should go in the documentation. Yeah. Me too. We actually got a bunch of questions, just none of them are actually people getting on stage with us. Here's a real question for you. Is Gammastrike more useful for day trading and finding support resistance in an environment where the positioning isn't changing drastically intraday versus a currently unfolding Black Swan event? Well, we just came out of a Black Swan event in April, and Gammastrike was fucking amazing for that. It was fantastic to see where things were positioning as price continued to fall, where we were going to bounce to. I mean, I think, and I mean, I could be wrong, but I think people using Gammastrike during the April downturn did very, very well. And I mean, you could go look at the streams. We were identifying support and resistance. We were identifying, where capitulation was going to be able to take us to when we found supports. And then we were able to, pick out those resistances and then short them again as price continued to the downside, saving quite a lot of money on premium, if nothing else, which was at a premium at the time. So yeah, I think it's great in both environments, especially because we calculate our own vol, and so you don't have to go based on the lagged volatility metrics present in your average broker.
Yeah, we go hard in the paint. I mean, it's great for whatever the hell you want to do. Whatever environment you're given, we will help you find an opportunity. That's what we're here for that, and like we'll help you manage your risk and the opportunities you're trying to take advantage of, the ones that
I
you
would
may
say
or may
that
not see.
the biggest problem we ran into with the last downturn was there was so much order flow that there was a few times where we lagged. But we've since smoothed a bunch of that out. It still pops up
Yeah.
from time to time, but not nearly as
Oh well,
badly.
yeah, we've pimped out our ingress so fucking much, it's unbelievable. That's all
And
Nuke.
and yeah,
He's the man.
and we're actually going to be abstracting those particular calculations out a little bit more so that they're calculated independently, and so we should not run into lag no matter what the order flow is.
And we'll be able to add more order flow.
Yep.
It'll be
Perhaps
fun.
even payment for it.
What's the mechanical effect of a futures chain going from backwardation to contango? I mean, not really a Gammastrike question, but will the transition happen first in further dated contracts and move to the near date, or will it happen in nearer dated and go towards the further date? Generally, it's due to an extreme amount of pressure, and so usually backwardation starts at the money. It's fairly rare for it to be further out on the chain, like the current not at the money, but the current expiration. So the nearest expiration is usually where you'll see that effect most pronounced. Please explain what charm is.
Delta decay. Next question.
And does it make sense to watch on a daily basis or the whole week as you do in Pickles Picks? Both.
So our last town hall, didn't we do a huge explainer on charm?
I think we did.
We tend to explain charm in a lot of the town halls.
I think it's hard for people to grasp. Charm's a weird one.
Because it's time based, but I think the last town hall was a really good one for a good explanation of charm. I mean, we could go over it here, but Delta starts off as a really smooth S curve, and then as the contract approaches expiry, the delta of that contract kind of follows in like a stair step where it's either gonna pay out or it's not gonna pay out. And charm is the measurement of how that smooth S curve evolves into a stair step. And yeah, definitely watch the explainer because it's got a lot of drawings and stuff.
Oh, I forgot a part of the contango backwardation question. Basically what's happening is that the near dated contract is going up and the farther dated contract is going down, essentially. And so you end up with an arbitrage opportunity where you can, short the near term and long the long term as things mean revert back to contango over time. So there are some assets which can stay in backwardation for very long periods of time, but generally the one that we talk about most is like volatility, and usually volatility does not stay in backwardation for extended periods of time because there's so much incentive to short the near term vol and long the long term vol. When will Gammastrike be available for Dillionaires? It already is.
Never.
Yeah, you want to
Nothing ever
come up
happens.
as the closer, Willie? Get up here.
I gotta post the nothing ever happens meme now.
I think derivative term delta should be described as increasingly flaccid or engorged. Huh.
Well, there's turgidity, right?
Hey, Gherk.
Did
the
you?
market bound? Spot Gamma was right.
What did we bounce at? We're at 59.41.
59.25.
Hold on. $59.25 ES, right?
No. Cash.
Or like US
I'm just-
500.
Yeah. I'm just don't mind me. I'm just shit posting with my mouth.
As one does. Ooh, I'm gonna need more of those.
Oil's like up 13%. That's cool.
We bounced, yeah, we bounced off of like SPX like 59.22. That's not 59.05.
Don't steal their thunder, Gurk.
I'm sorry, I'm
Nice,
extremely
man.
new to all of this. I just want to have a very simple understanding of how to safely do a covered call strategy. What would be the top Greek letters to watch? I mean, generally on equities for covered calls, I'm watching Gamma Max. As you know, once you hit Gamma Max, it's very unlikely that price is going to continue upward. There are some equities where you can also use delta neutral to the same effect, delta and gamma neutral, but generally, yeah, most stocks I'm looking at Gamma Max to sell covered calls. So I'm kind of looking at where Gamma tops out on the chain, or Delta tops out on the chain. You could use either one, but I'm kind of looking at that and trying to sell calls above those levels. Or at the money, in the hopes that the price of the equity declines, given that there's no more upside interest from that point on. Or significantly reduced upside interest from that point on. No problem, James. 59.2750. That was ES. 59.2750 was the low for ES, which is where my support line was. Which you would know if you checked my tweet.
Earn.
So now it's not just Pickles picks. It's also got to be your fucking tweets too. What other homework are you getting me, Gurk? Fucking goddamn it, dude.
I just
Back
want
in school.
No, dude.
I just want you guys to read Pickles picks so you can see all the good work I'm doing with our data.
I don't want to do homework.
Yeah, we still have all the other stuff that we have to build.
I know. It's only going to get
We're
better.
cooking, man. We're too busy cooking to eat.
Yeah. I just want some cereal when I get home. That's what I want. I smell like onions.
It's like that. It's like that. It's like that analogy about like the man at the barbecue, and like he sets up the grill, and his wife preps all the toppings and preps all the meat and preps all the like sides and appetizers, and he just like throws some meat on the grill for 30 minutes, and then everyone gives him the compliments. I'm the grill man.
Yes,
That's
that is correct.
I reclaim my time. Oh, here's Wooly.
Oh boy.
What's Willie got for us this week? Did you guys hear like my big speech that I gave on Vega neutral and convexity?
No.
Thank you for your input on Vega Neutral, Mr.
I-
Chairman. I'd like to thank you for the question. I would like to reclaim my time. Hi guys.
What's
Going
up, man?
on?
How you doing?
What's going on, man?
I'm frazzled beyond belief.
Wow. I expected a bigger expletive at the end of that groan.
Yeah. When your employer drops almost $2 million on equipment, it's like, this shit better work.
I don't have an
Work.
employer.
Like, feeling the pressure.
There's a golden retriever next to me. Where'd this thing come from?
Is it trying to hump you?
Not yet.
So check out this little trading journey I've had the last few days.
Wait, hold on.
And
Did you just sell puts every day?
did I? Well, kinda.
Okay.
Here's what happened was. So I've been. We talked about this before. I've been trying to work on, like positions that are a little further out, made a little cheaper by their structure, and carry some asymmetry, right?
Oh, gross.
Like-
Would you stop talking to those
Are you
people?
trading like me right now?
No, it's been kind of cool actually.
All right.
One benefit that I discovered.
Willie trying to run around
two
and
runs at
fucking pick up positive carry in his $5,000 IBKR account.
Well, it's more than that now. Anyway.
Well, yeah. All right.
5,050. Nice.
5,037. No. So the interesting part of it, and this will morph into a Gammastrike question that you can choose to address or not. If you don't want to counsel people to trade this way, I understand, but I'm trying it, and I'm kind of liking it. So the experience I had was like a week and a half ago, buying something for June AM expiry with like a big spread. I forget what the numbers. It was like 56, 53, 49. It's like really wide, but each spread cost like $500. With the right conditions, they were like 9-1, 10-1, 11-1 possible asymmetry. But the interesting part was they sat there because we did not break structure and go down for like a week and just didn't really change price. They just kind of stayed the same. They were worth what I paid.
Yeah.
And they sat there and they sat there. And was it when was our big fun day when Elania and Trump got all bitch slappy with each other? What day was that? I forget the day that was. The big Twitter war between our two presidents.
Oh, that was like last
a week ago today, I think.
Yeah,
it was last Thursday.
It was like last Thursday.
So I had just sort of come to the conclusion, like, this just isn't. It's not going anywhere. And looking further out on chains and stuff, and going, I don't know. This doesn't feel like this break we want is coming. So I sold the positions and took some shorter dated, like today, tomorrow, 0 day, 1 day, whatever. And then all that shit happened, and it boy, was I glad I did, because then I tripled that money.
Nice.
But I didn't lose anything, sitting in this huge spread with a bunch of time.
Yeah.
It just sat there worth the same value I paid for it. It was kind of cool. In fact, I think I sold them both at like 7% profit. It was like, okay, cool. They just sat there and held their value, and no problem. Doesn't look like the break's coming. Get out of them. And It was like, oh, well, this is new. That was kind of fun.
I've been telling you guys about debit spreads for years.
Well, I want to give like a real example.
Oh, okay.
So people may listen, because I'm no freaking whale, but like it was possible to do.
Yeah.
And it was possible to do, not in like a blind fashion, or not in like a strictly based on the cost of the spread fashion, because that's not always a great indicator of its value either. It's fun to goon over option strat, but that's not always, going to turn into reality. So, okay, great. Moving on to this week. Yesterday morning, I think it was yesterday morning, I'm like thinking, or no, maybe it was the day before. I'm thinking, I want to get into something at the end of the week, and I want something pretty close, because we rose up above 6,000, and played footsie with it for a day. So I got into 6,000p, 5,700p bear spread for tomorrow. Two
Okay.
pair of them. They were like 600 a piece.
Yeah.
Something like that. 650. Now yesterday they got run over, right?
Yeah.
They like bleh, they're down to 3 and change each, 2 and change each. Okay. So today comes along. I sold a bunch of 60, 80, 60, 90 bear call spreads for tomorrow.
Okay.
So I like reclaimed about $350 per spread by selling these new spreads.
Yeah.
So, okay, fine. I paid for one, I lost on the other. Okay,
Yeah,
great.
that's-
Then tonight happens.
Well, yeah. I can see that you're
And
very-
those 6,000, 5,700 spreads right now for tomorrow would be doing really well.
Now you have 10 IBKR $5,000 accounts.
Well, no, I don't, because I sold the fucking things.
Yeah, I know.
So
But in the alternate
But-
timeline, that Willie killing it.
that Willie, made 16 grand per spread tonight.
Here's my question
Um,
that I want to ask right off the bat. On the 10 wides that you sold to the upside, why didn't you just
Mhm.
sell enough to cover your carry? That way you could just
I
leave
would
the...
have gone. I remember it's a non-PDT margin account. I would have gone over my SMA. I was
okay.
staying within my SMA. So
Wait, no,
I
because
went-
you're not. Don't close anything. Just sell your carry on credit. Like zero out your debit spreads on the credit
Yeah,
spreads.
he's saying take a page from the authorized liquidity
Oh, well, no,
providers and lever up more.
Yeah.
Well, this was the other part of this scenario. I was considering, had the break happened today and it hadn't happened overnight with people shooting bombs at each other and me in the middle of a work meeting, I would have sold something like 5,950 and bought 5,900 and like flied off my profit that way. Although this is pretty volatile, probably not smart to try to sell anything in case we find out what happens the rest of the night and tomorrow morning. But if a normal drop had come, we'd cruised on down into my spread there, I would harvest the profit with another spread below it. I guess basically legging it into a butterfly. Right?
Yeah.
Like imagine it came down to 59.72
Mhm.
and stalled out. Okay. Sell another 59.70s and buy 59.40s to help the margin requirement and finance that. And the broker's happy to assemble all that as a big fat butterfly and not really charge me much margin. And I extract my profit and stay exposed and life goes on.
Yeah.
That would be option 2. The way this becomes a Gammastrike thing.
This is like the
It's
idiot
because-
trade.
Sure, but the way
Yeah.
this becomes advantageous for those that are using Gammastrike is I can look at where there's a lot of interest, not a lot of interest. Is 59.40 barren? Is it full of potentially sold calls? I don't know. Gammastrike gives me that information if I go to Greeks by Strike and poke around
Hell
and
yeah.
look by expiration. So,
This just turned into a
I
Gammastrike
feel-
advertisement, and I love it.
well, I feel like I'm better equipped, like with everything I've learned in all my other wandering studies and everything else, and that's making me do this. Like, just as this slowed down tonight, right, and things kind of chilled, I took again for AM expiry. What is it? 50. Let me look to be sure. I don't want to spout out the wrong numbers. I took just one to, be, what did you call me once years ago? Measured and risk averse.
Yeah.
59, 58, 57.
Okay.
So it's a butterfly. I bought the 59, sold 2 58s, bought a 57.
Okay.
It was 861 on the fill. It's currently at 29 on the ask and 13.90 on the bid. So okay, cool. It's not doing too bad. Now again, I'm non BDT, so I got to be careful about day trades. However, if you take advantage of IBKR allowing the extra hour past 4 p.m. Eastern for 1 DTE and forever in the future buying and selling. 0 DTEs, they meet their maker at 4 p.m., but 1 DTE and onwards are still available to do business with for 1 more hour after the 4 p.m. cash market close. Thank you, IBKR.
Yep.
And if you wait across the pause from 5 p.m. Eastern to 8:15 p.m. Eastern, congratulations, you're now trading the next day. Go ahead and sell that spread and not incur day trade.
Yep.
So now, unfortunately, I bought this spread for expiry during the after Globex reopened. So I gotta wait.
Yeah.
All right, fine, whatever. If it does the same thing it did last time, is my experience. It'll hang out around this price, and if we don't really have anything great or fireworks wise happen over the weekend, screw it, sell it.
Interesting
or
though.
If it's dropped in price, sell a spread above it and reclaim what I lost. And I'm feeling like I hit some kind of an epiphany here of like, wow, this is an easier way to trade.
It is.
And I have the information at my fingertips of just some characterization of the strikes I'm thinking about playing with.
Willie,
By going to Greeks by strike and going to the expiry breakdown.
you're starting to trade more like me.
Imagine that.
Except I'm still a degenerate. Like, if I'm losing money on a debit spread, I'm going to sell out of the money calls until I've fully recouped my loss. And then if those get blown out, I'm going to sell even more out of the money calls.
Yeah, exactly. Well, I mean, I because at this particular time that I don't have a bunch of time to really be locked in for full trading days. I got to take care of stuff at work, blah, blah, blah.
Yeah.
It's, at least it's possible. I mean, I could not possibly hands on a good 0 DTE move today. I tried one, didn't do any good. Lost me $300 because I wasn't, I was busy. So I guess maybe it's a little encouragement, a little bit of an advertisement for those listening to like, dig into those strategies. Like, try to understand it's not all about 0 DTE. And if you've managed to build up a little bit of an account, it's not impossible to think that way. I think sometimes we see these like, oh, somebody sold 5,000, 5,600, 5,200, 4,900s for 4 months from now. Oh my God, I could never trade like that. Well, I don't know. You kind of can.
You can. Yeah.
In a more measured way.
Or not. But yeah.
Or not. Yeah, right. So I don't know. I just was like, I was really enjoying it. And I think that if everything stays all tangled up in political intrigue and, once the Euro pours open their market tonight and maybe go, oh God, sell everything.
They're closer to Iran. So yeah.
Yeah. I mean, I could find myself, either tomorrow night willing to sell something else if this spread is just sitting there or it's losing value. Like, I'll never forget the Ukraine invasion years ago.
Yep.
Sitting in like, I don't know, $20,000 worth of like SPY calls and VIX puts, and like I was in a big fucking position. Like, okay, I'm swinging for the fences for this next week. Then all that happened, and I dumped everything.
Yeah.
And then by the next morning, the market fucking lifted off.
Yep, bounced right back.
When everybody was like, nah, who cares? And that position would have, that would have been 6 figures when it was all over.
Diaper.
So, and it's just, what's that old saying? Don't try to time the market, expand your time in the market.
Yep. I mean, that's kind of what I try to preach or have, is like, It's all about just being there at the right time and making sure that you take as little risk as possible so that you are exposed when something big happens.
Right, and that's where I want to offer a little encouragement to anybody thinking about that. I mean, what's the difference? Oh God, I want to try for a 0 DTE win here. It's kind of slow. I better get closer to spot. Oh God, it's going to be like $500 for this contract. Or I think I'm going to position for downside for a week from now with a larger structure, and that's only $500.
Swing trading in general
And
has a far higher success rate than intraday
sure,
trading.
and it's got way less chance of like in 2 candles going to zero.
Yeah, yeah.
Than the $500 I might have spent for the next 17 minutes.
My current thing is trying to convince the pickle jar that they should not be long side on SPX when realized volatility is crushing to historic lows.
Right. We're below.
That's tough.
Well,
people really just like to buy puts and buy calls and then sell them.
Well, that's because of the possible asymmetry is so seductive.
Okay, sure.
The $1 the $100 call that goes to $1,700. It's too much of a siren song, and I've lived that too. I know that feeling.
Who hasn't had a 50 cent
sometimes,
option go to $2,000? I mean,
exactly. I mean, it's sometimes when that happens, that's a great feeling. It's great for your account. It's great for your. I mean, Jesus, think of the bills you pay with that. I would think of the bills I pay with that. But you could also lose $100 50 times.
I don't pay my own electric bill.
Well, yeah, like you.
Popcorn Trader covers it.
Yeah, what all the calls you selling?
Yeah.
Yeah, exactly. So anyway, I that's how this turns back around. Like, if somebody's thinking like that, there's a way to keep the cost low and possibly be just as exposed to just as much asymmetry. And it's definitely worth exploring.
A great example.
You and others have been beating on me to think about this for years, and now finally I'm doing it. And remember that when you came along in the sudden collapse of Warden,
yeah.
What was like VIX was like 22 on the regular back then.
Yeah, it was very high. It
was like 22 to 28 for like a year and a half. So like a whole bunch of us came into this in a really, sort of distorted place in
extremely distorted. I remember how
and it stayed distorted for like a long freaking time.
I remember how like fucked up everybody got in the head when like VIX started to get shorted down to like 15, 14, 13,
oh God,
12.
Well, remember one time we were like, are we going to see 8?
Yeah, I remember.
It was like under 10 at one point. I mean, and coming off of like, I think also, I mean, I know that when I came along, when I finally got serious about it, and 2019-ish or so, it was like I can't touch SPX. Forget it. No way. Look at these prices. Look at this movement. Holy crap! And now knowing what we know, that's because there was just this warped world of VIX for a year and a half.
Well, I mean, we've seen both extremes at this point in the 4 years we've been doing this. I mean, we've seen volatility at literally its historic lows, and we've seen it at some of its highest, like, consistent levels ever.
Sure.
And so I feel like everybody at this point should be well prepared for both environments. But it's tough to shift your mindset from one to the next. Like we had this.
You want to hear a funny fact about? I finally got one of the like trade history services. You can connect to broker and keep your look back on your last 3 fucking years of this ticker or whatever. You don't know what my all-time best ticker is?
What?
VIX.
Huh? Was
like a lot?
Was that just because you had like
back then? because back then when it was so high and moving all over the place, I traded it
No, yeah.
because I could afford to trade it. I couldn't afford to trade SPX. And it was like really funny. Just a couple of months ago, I looked back and I'm like, well, holy shit, look at that. And like, you know, I don't know, like $9,000 in the lead.
I'm not
Everything else
I'm
is
not
like,
muted on Discord.
wow.
What the fuck are these people talking about?
I don't know. I'm talking to you on Discord.
JFresh is muted.
Anyway,
And Dork hasn't said
not
anything
muted.
for like an hour.
I'm listening to you old heads freaking talk to each other.
I know. I'm coming in as the closer again here.
Yeah, all I'm thinking about is my fucking sourdough and how fucking delicious it was.
Oh, you made sourdough? Nice.
Oh yeah, I made a big loaf. It's a big old boy.
Well, I'm gonna jump. I still got stuff to do, but I want
Oh,
to throw
Discord
that in there
audio's
because
been
I've
cutting out.
I've been who me?
No. Discord audio's been cutting out for like the audience.
Bummer. Probably their region problems.
Yeah, it
Get wrecked.
seems to be regional. Some
Wasn't-
people aren't having the issue.
Like Google Cloud Services had like a giant meltdown today. I read.
Yeah, they did. We
Like,
fucking
tons and tons of
Gammastrike like logged everybody out at one point.
services. Oh, that's nice.
Yeah, that was super awesome.
Yeah,
That was really
I saw
fun.
notices from a bunch of the other services.
I was
as well
like
as,
logged
oh,
into
I'm
the dev environment though, so I was able to keep playing it on the stream. And it resolved pretty quick. It was over in like 30 minutes, but Iran did it? Probably.
Yeah, right. Discord and their whole regional server fiasco, but they're still covering.
Yeah.
Anyway, I just wanted to throw that in that like, especially because today, like, I really wish I hadn't sold those spreads. I really wish I still had 6,050, 970 bear spreads for tomorrow right now.
Yeah.
I don't even want to look at what they would have been worth because
$3,000.
Oh God, I don't know. That's the other thing is when
Well,
all
they're
this
30
stuff
wide
happened-
and they'd be deep in the money, so they'd just be like
Deep in the money,
almost max value.
Well, right. I may have a little bit of theta to gain left if I sat through them all day tomorrow, but not much.
Did I miss the new feature launch? No. You want to?
Oh yeah, you're gonna do a new feature? I'll jump off. Then.
No, you can hang out. Hang out for it.
Okay. Well, I gotta eat my dinner. I'm starving.
Just eat it and hang out.
No, okay. I'll mute myself so I don't. It doesn't turn into a mukbang stream.
Yeah, I think we covered this last week, but we're gonna be pushing the new volatility page out to the beta users.
Ooh.
We got some fun stuff. We have all the stuff we had before, you know, the relative volatility gauges, the implied move, and you know the historic vol charts, which still don't have skew on them. JFresh. But yeah, we're gonna I know we showed you guys this last week, but you're gonna have the volatility surface for whatever you're looking at. You're gonna have the term structure. So you'll be able to take a look at how volatility is priced out on further expirations, and you'll also be able to look at the term structure at spot, or you'll be able to look at the term structure if spot were to move somewhere else. So that might give you an idea of where positioning could be really beneficial if volatility were to rise or fall, and where you think spot could end up, and it might give you some positional advantage. As you can see, like if spot moves up on SPX up to like let's say 60 to 50, the forward volatility comes down really hard. So yeah, and yeah, if it moves,
Somebody say really hard.
moves down, near term volatility goes up very sharply.
It's
So-
really hard.
Cool stuff there. And then on the smile, you can look at the smile over each expiry as well, and cross compare that with the current expiry on the 0 DTE or the next day's expiration, and so you can get an idea of where positioning is coming in. Like if you go look at the end of the month, it's pretty busy usually for the SPXW, or let's see, like the OPEX this Friday.
This is a cool feature because it allows you to look directly at our butt.
Yeah.
Dude.
The IV surface and all that. Yeah, I mean, it's great. This is wonderful stuff.
And this is based on the IV calculation engine of your own, not
Goddamn right.
supplied data.
We all
Okay.
made
Yeah.
ourselves, yeah.
Raw dogging it,
Um,
bro.
Can I jump into this and throw like a practical question at you?
Yeah.
Maybe a good teaching.
That's why I
moment.
told you
'Cause
to stay on
I've
and
been-
not eat your food.
Because I've been, I'm in part of it, and I never paid attention to term structure before. I've been trying to pay attention to it this last like month or so. So let me make a statement, like jumping off what I just described about how I've been trading. So here I am looking at these positions that are like week, 10 days, 15 days, whatever, further out, right? My understanding is, and where I've been, looking at the term structures to try to inform myself, am I buying in a period of time that's overpriced because of vol, or am I buying at a time that's perhaps underpriced? And
Well,
Take a strike.
I mean, like today,
yeah, like 5,500 for the AMX.
Yeah,
right.
slip that term structure down to 5,500, Gherk.
Oh. Okay, so that's low vol, right?
ooh, that was hard to get there.
Low vol relative to what?
Well, relative to where you just were on the strike.
Well,
array, if you will.
volatility of the current expiration would go up to like 45. So,
well, sure.
I mean,
But what I'm getting at is like, is this an indication for a trader trying to, add this to their arsenal of like, ooh, that area, that price, that strike has a lot of room to climb in volatility should there be an event or a change in price or change in whatever.
So here's
that
a better
spot
way to
today
think of it.
that causes the tails of that smile to rise.
So the term structure is not necessarily an anticipatory tool. It is more of a price discovery tool. So you picked a strike, 5,500, and what you should be thinking when you're looking at this is, what expiry gives me the most value for the theta?
Right. Okay. Sure. I don't know that I was expressing that way, but yeah, that's exactly like.
So
am I buying cheap with the possibility to sell expensive?
Well, yeah. So if you were going to do like a spread, right? If you looked at this for the two strikes you want to build your spread, you may think to yourself, if I make this a diagonal, I can get a way better fill, from these relative IVs. My odds of getting a better entry are higher because I picked this expiry and this expiry. So you see those like plateaus of IV, right? Those little stair steps, right? Those could tell that
little peak.
Right. So you were targeting that expiry that's right before the drop, and then you're like, oh wait, if I get the next expiry out, it looks like I might be getting a more competitive deal at this time.
I might be finding a better sale price out here.
If you're going long, that's what you want. But if you're selling, you might want to go on the other expiry.
If I'm saying
exactly
right, turn that around to sell high, sell high, buy back low.
Yeah, potentially. Yeah, you see.
I mean,
this is that's just one way you could use this.
You're gonna have to teach the pickle jar about term structure.
But these tools are definitely more geared towards like price discovery and less towards risk management. That's what a lot of the hedging stuff is. I guess you could use this for that, but I think it is better served as a way for you to identify, and you can use the volatility smile. If you have an expiry in mind, you can use the volatility smile to sort of try to pick out strikes to whichever side you're playing. And then when you've picked out those strikes, you can look at their term structure, and it's two ways to slice the surface and get an idea of what contract pricing is like.
And
yeah, so if you have like a week ahead of you where a bunch of event vols priced in, but you think those events are going to be big nothing burgers, right? Then you can pick where like say it's next week, you can pick where IV's at its highest. You can short that vol, right? And then you just get positive carry as volatility continues to crush over the economic events. You just sit in that
right.
contract till it expires.
Rather than being simply focused on constructing the spread based on its price,
Yeah.
now you can get some characteristics of the strikes spread.
Well, I
Well,
mean,
you're still
IV
doing it
is
based on
price. Yeah.
Yeah, you're still doing it based on price, but it's a more
You get some
holistic
some
view.
color on that strike.
Yeah, you it's just its relative price, right? That we're talking
Sure.
about here. So, I mean, the numbers are the numbers when you go to look at the actual contract values, but these IVs are just another expression of those numbers.
Right. Okay. Someone said this to me once, and I couldn't quite wrap my head around it, but because I'm not sure that they were correct. You look at the surface, and that's a 3-dimensional representation:
Yes,
time, price, and
it's price.
Con-
It's strike, expiry, and contract, or it's strike, expiry, and implied volatility.
IV. Right.
Yeah.
Term structure and the middle chart and the right hand chart are the X and the Y.
Yeah,
You're
look.
just taking a slice. You're like
There's
taking a sheet of paper
there's
and
your
dividing it
IV
into
curve,
spaces,
right? And then
Sure.
as you walk forward, you're moving through that curve.
Okay.
I'm a little
Right,
off
exactly.
a little
Okay.
off
So
center
that
here.
is- 'cause
Right?
when
And
the
then
person-
if I turn it, there's your term
that's the
structure.
other end, yeah. The when I heard that, I was like really latching onto that because just geometrically that made a lot of sense to me. Looking at the surface, getting a really solid, more instinctual understanding of which axis is which, and that hopefully that helps people that are going to now embark upon a journey of learning about this. That the middle chart is the X, and the right chart is the Y of the X, Y, and Z of the surface.
Yep.
Yeah,
If you need
they're
to
slices.
simplify it to understand it, those are the direction slices.
Think of it like a deli slicer, right?
The
That's a
the
log
axes.
of ham. If it's like a log of ham you're putting into a deli slicer, right? Which direction are you putting the log of ham into the deli slicer?
Right, because you're making Christmas dinner or you're making dork chops.
Exactly. That's correct. Now you're getting it. You understand. Congratulations.
Everything. It's like 6 degrees of separation from dork chops.
Everything. Yeah.
Get it? Kevin Bacon, dork chops. You see what I did there?
God damn it.
This guy
Come back
says
for the midnight show. We work blue. All right. Anyway, I got to jump, but yeah, no, very, very, very cool. I hope that helps.
Enjoy your dinner, Willie.
People grasping this that get into that because I think that's like leveling up a little bit, is understanding a little more about strikes further out.
Oh yeah, I hope everyone's hyped for it because it's just really cool to look at. Honestly, it's just whenever we come up with these cool ways to visualize the data, we all get so giddy and excited because it's just so cool to look at it like that.
Yeah, it's cool. Cool.
Super cool.
All right, guys, I'm gonna jump off and keep listening.
Later, man.
I reclaim my time.
Yeah, we're reclaiming our time, Willie. Reclaiming our time.
I reclaim my time.
The committee stands adjourned.
I reclaim my time.
Excuse me, Chair. I'm reclaiming my time. Keon over on the Discord or the YouTube says, my financial advisor watches your channel and I've lost all my savings. I mean, if your financial advisor is watching YouTube, you may have hired a retard. Also, financial advisors are notoriously stupid anyway, so maybe get like a wealth or asset manager. That might do you a little better. Not anymore, because your savings are gone.
Yeah, when you have savings again.
Yeah, when you've saved up again, maybe seek out a higher grade of professional.
Yeah.
Sup, Gherk, in the negative and positive delta in the chart you showed earlier, those tall delta bars, wouldn't the market participants be inclined to burst through them? I mean, they'd love to. Why do they act like a repellent to price and pin the price down in choppy range? Is it because we're in a positive gamma environment? Yes, partially, but it's also because the their effect on pricing is strongest at those levels. And they're pushing back against that. They want to have sold all those calls and not have them go in the money.
Yeah, the forces at play are so big. They're so huge, right? It's kind of hard to wrap your brain around. People, I mean, a mom and pop shop would love to pop that resistance and squeeze that position, but imagine if Gherk was managing a $10 billion portfolio whose only job was to short volatility, he would just crush you like a bug.
Yeah.
He would,
Yeah,
he would
these
demolish you.
some of these flows are enormous.
Unbelievably big.
Yeah. Even big institutions can have issues with that, and that's what's going on there. You're reaching a
think about it,
plateau in the dynamic hedging, and the
think about
dynamic
a
hedging
contract.
starts to flow against the price improvement.
Think about a contract, right? Like has a delta of 0.5, and it is, it has an OI of, let's say, 10,000. Okay. That is 5,000 shares, quote unquote shares of SPX in hedging right there, just in delta.
Which are 10 of every share in the underlying index.
So the amount of
So you have
capital,
50,000 shares of the underlying index in 10,000 OI.
yeah, and that's just the delta. And then when you think about gamma, like if that contract has a gamma of 0.03 or something crazy like that, I mean, now you're talking about, so every dollar that SPX moves, you're talking about 300 of those adding on or falling off. Right. So and so if SPX goes up $10, right, the numbers just boggle the mind when you really kind of do the napkin math on them. So yes, there are definitely forces that may or may not try to do that, but they better have a damn good reason or a damn good amount of leverage to go for it. And it happens. It does happen. But it's a game of odds and of big players, high rollers. And you're sitting at the table, right, just basically calling every hand because you don't have enough money to actually raise. So to put it in perspective, yes, I mean, yeah, definitely, their participants would love to capitalize on that and blow up those positions, but they're part of another huge position, and they have so much leverage, it's unbelievable. And the market maker's also working against you. It's just really difficult, unless something changes. Then it's not. But until then, it is. Nothing ever happens.
Yeah, what's our nominal GDP?
A lot.
So
2 trillion.
I think you're pretty close.
20, what is it?
I'm just gonna look it up because
Yeah.
It's what, like 20,
for some reason I
20
think it's
something.
28, but it is almost 30. Yeah, it's 29.9.
So think about this: almost 10% of our nominal GDP is currently open in delta exposure on both. More than 10%, like 13% of our nominal GDP is open in delta exposure just on SPX contracts.
Yep. That is correct.
And that's before we get into the margin leverage used to open those contracts.
Yeah.
I mean, the derivatives market is quadrillions of dollars.
It's pretty big.
It's a lot of fucking money. There's a lot of zeros,
So many zeros. Tremendous zeros. People have looked at these zeros and they ask me.
I have an uncle at
with all these
MIT,
zeros?
and even he was like, I can't do this many zeros.
Tremendous person. Very smart. If you knew
Yeah.
him, you know he's incredibly smart.
Everyone who knows him, smartest man they've ever met.
And he looks at me and he says to me, "What's with all these zeros? There's just so many zeros. What are you doing with these zeros?" And I tell him, this is because we're great.
Okay, this question does continue. before we start doing Trump speeches. In the case for the gamma bars, how does one gauge gamma as high or low at each strike? Because the delta bar and gamma bar look relatively the same. And why does the gamma bar per strike tend to act as a repellent and pin price down and create the choppy, slow days we've been experiencing lately? Is it because we're in positive gamma? Will this always be this slow? Will this always be this slow days? Does one just get level 3 options? Okay, I don't know what the end of that meant. But gamma is telling you how fast the delta will change. So you look at you look at delta, then you look at gamma. And yes, positive gamma environments tend to crush volatility, especially realized volatility, which reduces the range in which the index will trade because variance trims sharply.
I don't know what that has to do with level 3 options, though.
But
He just wants to
I'm
straight naked
asking.
short
I think
options.
he's asking like if he can
Right.
sell like if he should be selling options in these environments. Yeah, the benefit is definitely on the sell side. I mean, except for tonight when you get a black swan
Until
event.
it blows up. Yeah.
Yeah.
Well, that's the steamroller you're picking pennies up in front of right there.
Yep.
Yeah.
Maybe
because
that's
it's
why.
not
Maybe that's
really-
why I sell so many 0DT options, because like nothing bad in the world ever happens during market hours. It's always
That's why
overnight.
everybody sells 0 DTE options.
Because nothing ever happens intraday.
But
And they sell so many. That
except
it
that one
creates
day
the
that they
reality wave
lost a bomb in Poland.
That was fun.
That was a great day. I'll never forget. Verax came in fucking hot with the tweet that like somebody tweeted it on X like 5 minutes before the market just tanked.
Yeah.
When IV goes below HV on SPX or SPY, is it dumb to go buy a call or put? Why is that? Not why is it difficult for people to shift their minds from high vol to low vol like we're in? Well, when IV is below HV, options are cheap relative to their historic performance. So that's usually a scenario where like getting options with theta is beneficial. Well, specifically puts with theta is beneficial because you would expect IV to rise and meet historic performance at some point. When HV is below IV, that's usually an opportunity to short options. It's not as simple as that, but I mean that's the basics.
Yeah, you have to ask yourself, you know, is IV going to meet HV or is HV going to meet IV?
Yeah.
And it's, you know, it's not difficult for people to shift their it's not like people don't see this. Right? So just to answer the second half of that, it's not that people don't see this. It's just it's where the positioning is. These positions, once again, to harken back to pre-Trump speech, they're big. They're really big, and trying to shift that much stuff around is complicated. And in doing so, you affect the market you are participating in. So you have a bunch of people. Basically, imagine a busy New York Stock Exchange pre-digitization, right? A bunch of people yelling and running around and doing stuff. You're trying to sit there and sneak around and get the right position without everyone catching wind, and they're all doing the exact same thing. Things move fairly slowly, unless there's a big obvious thing that happens.
Nothing ever happens.
That is correct.
Until it does.
Yeah. And then when it does, it's a nothing burger, you schizo. Mongo Man, it sounds like interest is picking up on Fubo. Is Fubo going down? I gotta find out now. I have 100 shares of Fubo. No. Streaming soccer services do well in World War III. Who'd have thunk it?
Yeah, no problem, Gorilla Mode.
Well,
I think, oh, someone asked me what a diamond spread is? That's not a real thing.
Baby farm.
yes, it's
Yeah,
a baby farm.
I think it's baby farm time.
Yeah.
Little G-Wagon, diamond spreads aren't real. Thanks, broskies. Cock! There he goes. Now we got him back.
There it is. There it is.
Hey, Darth Dan's in here too. Hi, Darth Dan. Haven't seen you in a bit. Hope you're good.
Darth Dan's anticipating his imaginary anniversary with me.
Yeah. Gherk's husband.
Fucking bastard.
God. Well, the market is.
Oh, someone does have one last question. The bar fill percentage on IVs on the scanners. Oh, some of the scanners. What mean? JFresh is doing docs for the scanners as we speak. Currently.
Yeah, I'm in the middle of.
Yeah, and so you guys will get some documentation on scanners maybe like next week or so. I'll let you know when it's out.
Written docs on the new Vol page too. So
Hot.
Yeah, JFresh is being a no life sweat lord when it comes to writing docs. It's amazing. Yeah, he's the World of Warcraft player in that South Park episode right
Did
now.
you
Times
see
like
the-
these where I wish that LLMs actually worked.
Did you see the IV on the SPX 6325 strike?
Looks like shit.
It's not bullish. Jesus fucking Christ.
What does it look like further out? That's what I want to know.
I mean, there's
Looks
a
like it evens out.
yeah, it starts to.
Is that for the 20th? Ew.
Yeah, there's a fuck ton of sold calls at those strikes. You know what's interesting is on the SPX chain, there's not a lot of like put selling near the money at all. It's all way the fuck out down at like 5360 and lower.
Yeah, those spreads
Oh.
might have gotten blown out at the end of the day.
Yeah, this overnight move's got some fucking range on it if it keeps dumping.
Yeah, well, yeah, and all those puts that got.
Oh my
sold is probably
god,
gonna have a
my
little bit of Vega.
prediction for the week is fucking spot on now. I did it again. Wait, what was my low? 59.38? Where are we trading now? 59.55. Son of a bitch. Whatever.
You know what? I'll take my silver medal because I beat JFresh by $5.
How did I know that there was going to be Israeli strike on Iran on Friday?
Well, you saw the Head and Shoulders. It was the geopolitical Head and Shoulders, of course.
Yeah.
Because you're Persian.
Oh, you
I reclaim
bastard.
my time.
I'm reclaiming all the time and ending this fucking call.
Yes or no question. It's simple.
Which question?
Please answer the question. Yes or no.
I reclaim my time.
I reclaim my time. I said it first.
Chairman!
I motion to reclaim my time.
Wait, I'm the chairman.
Are you?
No, I'm sorry. The floor goes to the gentleman from Texas.
That's correct.
Yeah, let's call it. No one has questions, obviously. If they did, they'd raise their hand.
Yeah.
So,
Oh,
That
Jay
sounds
Fresh
like
is
Jay Fresh
one
has
of
got
Jay
kids,
Fresh's
so-
You like
children.
You're like, I just figured I'd unmute myself to get this over with.
I see the baby farms going great. Excellent.
yeah, the first prototypes are doing well. Good.
Awesome. All right, that's enough. Have a good night, guys. Later.
Thanks for having us.
Anytime, dude. Thanks for coming on.